Hello traders, Cory Mitchell here with TradeThatSwing.com. This is your swing trading stock market outlook for the week of June 23rd. Each week I do the same process, just helping myself decide how aggressively I want to be trading and in which direction. Couple lists here that I like to look through. This one I didn't get to update it last week, so we'll be updating it this week. Current swing trading watch list. We do have the best swing trading stocks watch list. That's high momentum stock names, and that one also may get updated this week. And yeah, a couple other lists you can just check out for things that have been performing well over different time frames. Let's get into it. First thing I like to look at is the indices. We have a couple different ones. We have the NASDAQ, the S&P 500, the NYSE Composite, and the Russell 2000. So the NYSE Composite, probably the broadest measure that I look at. Just get that out of there for a second. Lots of different industries, different size companies, more diverse index than the S&P and the NASDAQ 100, which are much bigger companies, and the QQQ or the NASDAQ 100 a little bit more centralized in tech. We also have the Canadian index. You can see all of them are at least in short-term uptrends. The Russell 2000, not quite as strong, but still, even it is in a uptrend. Higher swing highs, higher swing lows. Have definitely noticed this, bit of slowing. That is not indicative of necessarily something bad. We could continue to drift up, and uptrends often do drift. But we are definitely out of the, just screaming higher phase at the moment. It could kick in again. But for now, typically, if you're looking at profit targets and you're seeing this type of thing in the stocks you're trading, where it's starting to slow down, I'm going to use that information. I'm not just going to assume that we're going to start screaming higher again. If the recent trend has been, maybe we did scream higher for a while, but more recently it's, smaller up moves. And yeah, I'll use that information. But we are still in an uptrend in all these indices. And so no reason to not be participating on the long side. If this scares you a little bit that it's slowed down, you could back off your exposure a little bit if you wanted to, but basically everything's still in okay shape. Let's look at Bitcoin for a second. So all-time highs up here around 110. I could clean up a few of these boxes now, I guess, because they're not super relevant anymore, but we broke below, we broke back above this area, and now it's like, okay, can we get above the all-time highs? What I like to see is a break above and then a successful retest and hold, and then a move back up. We have not had that yet. We've had the break, but we have not had a successful retest and hold, and then the price continuing to move up. So right now, I could draw a box around this. We're basically stuck in this area. So an opportunity to maybe pick up at the lower end of this range, but if it breaks below, I'd consider getting out. What I'd really prefer is to wait for a little false breakout and then get in if it pops back up, because then we've already had the false breakout at the bottom. Jump in too soon, we run the risk of that false breakout stopping us out and then missing the move to the upside. No matter which way you go, because sometimes there isn't a false breakout to the downside and the price just runs higher. So, that's trading. You got to decide which way you want to trade and which one you can live with, basically. So there is the opportunity here, because we basically have this box here. So we're at the lower end of that range. If this holds this area and moves up, potential for a retest of this area, but the real big trade to me is, that would basically just be to get us in, see how it acts up here. If it doesn't act well, get out. But if it breaks out of there, then we're waiting for the retest and hold, and that sets up the bigger picture move. Gold down here, the gold ETF You can see we had this more complex decline, but nice bounce back right near those highs again. The gold miners have breached those highs, moved above them. That's a favorable sign, at least for the moment. So still in an overall uptrend. Yes, we had this complex pullback and we've started to move up. So still in an uptrend there. So gold and gold stocks still an option for trading. Let's look at the market health indicators. These give an idea of what's going on underneath the hood, which just looking at the price action may not tell us. Volume not important to me at the moment. Really just looking at that near potential turning points after a sell-off. So now that we're up here, not really important to me. We do look at one other volume indicator. I'll talk about that in a minute. Rate of change, that's simply the daily percentage movement of the S&P 500. And uptrends are characterized by low volatility, and we are definitely low volatility, especially to the downside. We're not seeing any big drops like what we were seeing over here earlier in the year. So high volatility, like what started this, characterized by downtrends, turning points. And low volatility, characteristic or correlated to uptrends. And so this is what we're seeing. So no indication there. If we started seeing big sell-off days, that would be early warning that selling pressure is coming in. Be extremely cautious. I step aside from all buying when there's a 2% down day or more in the S&P 500, and wait a couple days, see how things go. But typically, that's a warning sign. Advanced decline line, advancing stocks minus declining stocks is a cumulative number. It is hit all-time highs here and is just below it at the moment. The S&P has not hit all-time highs. That is a positive divergence. Generally indicates that the S&P 500 will hit all-time highs. Again, basically matching the indicator within relatively short order. We're in May, June, a little more than a month into this. And so, but we're getting pretty close. Up volume divided by total volume. This really only relevant near turning points like what we had down here, which was our last signal, a 90% upside day, which means 90% of all volume that occurred that day occurred in stocks moving to the upside. Now the only thing relevant would be is if we had a 90% downside day, or how it would look on this chart is a reading way down here. So basically only 10% upside volume. So 10% upside volume equivalent to 90% downside volume. That'd be the opposite signal. That would say 90% of the volume that occurred that day occurred in stocks moving to the downside. That would be indicative of big selling coming into the market. Be very cautious. This is percentage of stocks above their 50-day moving average, just a very crude measure of how many stocks are in uptrends. We got about 60% of S&P 500 and all U.S. stocks in uptrends, so still fairly favorable for trading on the long side. It's just going to generally be easier to make money on the long side if most stocks are moving up. If you just want to see what those are called, on TradingView, MMFI, S5FI is the S&P 500 one, and MMFI is the all U.S. stocks percentage above their 50-day moving average. And that's about it. So I'm continuing to trade stocks on the long side. Bitcoin not really of interest currently, but it is right at the bottom of that range. So there is that kind of short-term potential to pick some up if it acts well at the bottom of that range. And then the real big trade is then if it breaks above that range and can hold and continue running. Or if it continues to drop, that sets up some trades at lower levels. Gold stocks remain a possibility for the longer term uptrend they're in as well. So some possibilities out there with Bitcoin becoming a little bit more interesting at the moment. And stocks still doing well and gold doing well. So lots out there to consider. Happy trading.